Welcome, everyone. I'm Ted Earhart. As I've been meeting with clients in the last couple months, most have been pleasantly surprised to find that their investment accounts have been generally flat to increasingly positive for the calendar year 2020. It leaves a lot of people scratching their heads and asking the question, how can the stock market possibly be up with the economy taking such a huge hit in 2020 because of the global pandemic? Well, it's a good question, so I want to spend a few minutes on it today. I think the best place to start is by mentioning, when people talk about the market in quotes, what they're really talking about are these major market indices like the Dow Jones Industrial Average and the S&P 500. And that's really where we're going to focus our time. There's a lot of different reasons why the stock market can seem to totally diverge from the broader economy, but we're going to focus in on the more narrow issue of these market indices, really what is behind them and how they're calculated, because I think that'll give you some insight into why we're seeing kind of such a dichotomy between, again, the Main Street economy and what's happening on Wall Street. So we'll start out with the Dow Jones, of course, because it's without question the most well-known index in the United States. It's the one that people hear about most in the media. And so I think it makes sense to start there. The big issue with the Dow, of course, is it's only 30 companies. This is great trivia, of course. If we ever get back to doing dinner parties, ask people how many companies are in the Dow Jones Industrial Average. Very few people know this. But obviously, 30 companies is not a true representation of the U.S. economy. It's not even a good representation of the broader stock market, frankly. There's over 3,000 publicly traded stocks in the U.S. So another way to put this is when you hear about the Dow Jones on the day-to-day basis, you're hearing about less than 1% of all the stocks out there. So for this reason, a lot of professional investors focus in or pay more attention to the broader Standard & Poor's or the S&P 500 index, which is the largest 500 public companies in the U.S. Now, this is definitely it's more broad with 500 names, but it has its own shortcomings. And the one I want to focus on most today is the fact that it's a so-called weighted index. And that just means that the biggest companies they have a disproportionate influence over the day-to-day and year-to-year returns. So, for example, here's the top 25 companies on the S&P 500 list as of most recently. Now, it looks like 26 because Google's on here twice with 2 share classes. But that aside, all I want to point out is here's 5% of the names of the S&P 500, and they account for 42% of the total weighting. In a more extreme example, the top five, which is 1% of the total, these alone account for nearly a quarter of the entire weighting of the S&P 500. So you can see how that can certainly do some weird things depending on the stock market performance of these different companies. In 2020, because of the pandemic, a lot of these top 5 names, in fact, all of these top 5 companies, I think it's easy to argue, have actually benefited from people working remotely and, of course, doing more things over the internet, whether it's communicating or buying things through things like Amazon. And consequently, the stock price of these 5 companies have all been very, very strong in 2020. And therefore, what we're seeing is this small group of companies have really disproportionately driven the market and really carried the load. It's been just like an amazing effect. And there was a good article in the Wall Street Journal just last week. James McIntosh, one of the writers, talked about how on Tuesday, August 18th, the S&P 500 touched a new high. But on that day, I think he wrote 332 companies were actually 332 of the 500 had their stock prices go down that day, were negative. But the balance, the other 168, were positive. So even though, let's just call it roughly 2/3 of the companies were negative and 1/3 were positive, because of the way the index is constructed with the biggest companies carrying the biggest weights, the average moved up. So that is the crazy effect that we've seen, not only in 2020, but really over the last number of years. And I'll leave you, this will be the last thing we talk about today. This was some extremely striking research I saw, and I just wanted to share it with you to kind of finalize this crazy impact of how weighted indexes can do weird things. So the researchers, the people who put this thing together, what they did is they took those top 5 companies we talked about and Netflix. Netflix isn't in the top 5, but it's definitely in the top 50 of the S&P 500. And they graphed what those 6 companies did over the last 5 years. And as a group, their stock prices have gone up about threefold. What they also did is they stripped these 6 companies out of the S&P 500. So this red line is the S&P 500 excluding Facebook, Apple, Alphabet, etc. And what is just shocking is over the last 5 years, without those 6 companies, the S&P 500, or the market, as people think about it, has basically done nothing. It's almost flat when you exclude those handful of names, which have really just completely driven the major market indices. So at the end of the day, when you are asking this crazy question about, or thinking about this idea, the stock market is touching new all-time highs right in the midst of a major economic contraction with record unemployment. These are some of the reasons why. The Dow Jones Industrial Average is a very narrow group of companies, and the S&P 500 is weighted towards the biggest companies. The Dow is also just, those 30 companies are the biggest companies, which we talked about. And generally speaking, the largest companies in the U.S. have benefited from what's happened given the pandemic. So those are a few reasons to certainly help explain why stock prices seem to be very disconnected from what's going on so-called Main Street. There's other reasons, of course, but we'll save those for another day. I appreciate you tuning in today. As usual, if you have any questions, feel free to make a comment. And if there's other questions or things on your mind, feel free to drop a comment, because I'm always looking for ideas, things to touch on. And we, of course, appreciate your feedback. So thanks for tuning in, and we'll see you next time.